Good morning, ladies and gentlemen. This is Clueless 8. It's almost afternoon here in the East Coast. It's 11:45. We have had a tremendous morning, and I thought it was important to help my members and free trial subscribers in explaining to them very briefly and a quick update follow through what I explained very clearly in this particular chart on the S&P 500 this morning. People who took the time to understand, people who have taken the group coaching sessions know very well what they need to do. People who haven't, they act lost, they blame the market, but the ultimate blame lies in yourself, and we all know that. So here is what I'm seeing. As I predicted and forecasted, we are right here, which I showed before, on the top of the Bollinger. Let me just move this green line to reveal the Bollinger right there. Now, if I zoom in, which is very imperative to do right now, given the force in the market, look at the oversold conditions. This is a powerful move. We are not fully overbought yet. Why? Just because we got into the 80+ zone? No. You got to have it follow through on the percentage D directional line, this one, the blue one, to go ahead and match that. So, simple stuff. I mean, detailed stuff, but you know what? It makes money, and that's what it's all about. So bottom line is, when this blue line follows through and gets up here somewhere, if it does, and then you start to see some overbought conditions, real overbought conditions, and a follow through. Maybe it stays overbought for a couple of hours or maybe a couple of days. In my opinion, we're going to have a strong finish to the week. I've mentioned that before, and that's exactly what's playing out. So wouldn't be surprised if we stay overbought conditions even after the Fed. So at this point, we are hitting resistance here on the upper Bollinger. I told you the Bollingers were pinched. That's exactly what's going on. And at least looking at this here and extrapolating out, I would say that the sell level probably gets up to a higher level, and for that we have to move some lines around. I would say that we could very well get into the 2090 to 2095 level. Okay, and that's this line here. Now, why am I saying that? Because there's a lot of supply here. This was a huge reversal that particular morning. Let me see if I can show this to you all. I don't think so. You can see a spinning top naked bar and a very sharp reversal at around 3 p.m. And that was, so you got to look at all these different inflection points where the market turned up or down. So putting a line up here would be somewhat logical on my part, the stuff that I do. And you're looking at around, close to 2090 to 20. I would say about 2095, okay, on a very sharp move up. Given what we're seeing here, wouldn't be surprised if we get a powerful move after the Fed, because the majority believe that we're going to fall, right? So the markets do what they do best, which is fool the masses. So at this point, is it possible to get two more marching soldiers to get us up there? Absolutely, okay? And that's the line that I just showed you here. Is it possible that we go higher and engage the 2100 level just for the heck of it, just to show the dogmatic bears and the skeptics that and the doubters and the majority who just sat behind and never made money, that we can get there? They can certainly do that too. Whichever the case, I'm keeping a very close eye on a lot of internals, and at this point, do not overtrade. Do not overtrade. You have nice profits, take a lot off the table, sit there. Greed kills. Like they say, bulls make money, bears make money. It's the pigs who die. So don't be one, okay? So the bottom line is that there's a lot of different levels here. Monitor it and also monitor this. Show you quickly while I am at it. Look at the Dow Jones Industrial Average. I'd drawn this chart weeks ago. This is what I showed, and guess what we're engaging? We are at this point, looks likely, based on the Bollingers, going to 17,845. Is that possible? Well, what is not possible? I've shown this so many times. I mean, it's almost like a mathematical science. I just don't know the exact timing and the date as to when it's going to happen, but I've shown that. And you guys got to play, according to your means on that. So, in the meantime, the downtrend line intersects at around 17,700. Whichever the way you look at it, sideways bias on the oversold conditions. Unless the Fed does something really nasty or says something really nasty and we break below, let's say below 17,511, like 130, 50 points from here. This trend is intact up towards these levels. Okay, at some point or another, we're going to engage this. This pattern symmetry is going to get complete. I've shown this, I've mentioned this so many times. This dragon bullish formation. If it gets up here, 18,000, a nice pullback for 300-400 points would be great. Even if it gets up here to the 17,686 level, a pullback would be welcome. This is a left shoulder. There'll be a right shoulder here. Even if it falls here, this pattern that I just showed you, this one, okay, also can be repeated. Pattern symmetries happen, and you have to have a very keen eye on seeing that. 99% of traders who headbutt with me, 99% of traders who are wrong, do not recognize patterns. Patterns happen because human behavior never changes, okay? And when human behavior never changes, what do you expect, okay? It's the same old stuff. Again, you have to know the technicals. You have to know the background, why this is happening. You cannot be a dogmatic bear or a dogmatic bull. I want to warn that, just say that real clear. Let me do a parallel line here. This video cast is extremely important for a lot of people, including myself. Let me take this one out. So this is what you're seeing, okay? Now, let's take a look at the S&P. Oh, we did. Let's take a look at the Russell 2000. Russell 2000 looks fantastic. Look, I drew this chart a couple of weeks ago, a month ago or more, and I projected this. At this point, it is almost confirmed. It is all, and this line was drawn off these stochastic lows. This is a really beautiful geometric chart. We have the bands here, right? 1130, 1210. I said we would get to 1180 to 1210. This is the next logical move. 1190. This is a dragon bullish pattern. Okay, market structure pattern where there are multiple lows. You can call this a left shoulder. You can call this a right shoulder. There's the head. As long as these stay intact at 1130, we're fine. At this point, we're heading towards 1190. Swing players can throw it out there. If it comes down a little bit, you can add. But looks like this pattern gets completed. I am not saying we're going to go back to 1300. I doubt it. At some point, it will. When oil really peaks, oil really starts to go, I'm sure it will. Okay, but this is a fantastic pattern, ladies and gentlemen. Okay. Okay. Bollingers. If you want short-term moves, you're looking another 20 points or so on the RUTs. That's a significant amount of points on the that's 100, 200% type of moves. Okay. This was the reversal candle on Fed Day, 1194. It probably gets there. So I'm just going to draw a line there for everyone to see. This is not child's play. This is real life. This is real money at play. You can make hundreds of thousands of dollars. Sometimes you can make less, depending on how much you play with. But remember, there is always risk, and you got to manage it. How you manage your risk, I have no idea, okay? Because a lot of risk management, a significant amount of risk management is mental. Are you a person who's willing to risk some money in the market to make money? Or are you always looking for the perfect moment? If you're looking for the perfect moment, you will never make money in the market. Just letting you know that, okay? Because by the time things are good, the market's done, meaning that it's overbought and it's gone. Let's take a look at another very important one, which is the Qs. The Qs are looking on the hourly, looking like they want to get up to 114, and it's pretty clear that it wants to get there. So let me see here. 1 second. Let me look at the daily. So the dailies are certainly heading back towards the same levels, towards the highs. Once it gets to the highs, it might break out, for all I know. Whichever the case, another massive dragon bullish formation. Now these are all, the markets. You don't always have to go crazy about the market. But you gotta learn from it. Just like in life, if you don't learn from experiences, just don't do this. Okay. So simple as that. Same thing in life. So here you had the channel. We fell out of it. So here's your dragon bullish formation. Okay, right there. That's it. That's a straightforward one. In between, you get the red days and all that stuff, throws people off. But look at what's happening here in the stochastics. Keeps them going higher. Okay, and it's staying overbought, because things can stay overbought. Things for staying overbought, and It can, you know, it just does that. I told you, October, they're going to end it on a solid note. You honestly think they're going to crash the market between now and Friday? I mean, just the way a couple of days ago when I mentioned that we were barely almost at 1% below the going break even on the markets, and you honestly think that they were just going to let it go? Well, they did. They pulled the market down, threw everyone off the boat, and then took off. And that's exactly what goes on. All right, fund managers have to keep their jobs, and I posted articles on that note coming from much bigger sources. Okay, and they need to basically chase, and they need to put the high performing portfolios in the books. So the bottom line is that that's what you got to do. So you got to look at the bigger picture and then work in the smaller picture in between. Let's take a quick look at the VIX while I'm at it. The VIX looks like crap right now. Okay, even the 1 hour chart on the VIX, look at this. I mean, it hasn't even come close to being oversold. What's oversold? Oversold is actually between 13 and 14. I'm really not caring about the VIX right now. It's good to buy some if you want, you know, for its protection. But don't expect it to just go nuts. UVXY, same story. Still not oversold yet. It'll be a screaming buy, in my opinion, somewhere between $24 and $25 right here, okay? And I'll be a very heavy buyer of UVXY. By that time, the technicals will probably confirm that we are deeply oversold. And guess what? It can go lower. So just the way the market crashed and burned in August, this can go lower too. If I project out, extrapolate out this this falling wedge, then it comes to 22. Is it possible? Absolutely. That's where euphoria takes in, and the UVXY takes a big dump. All right? So that's it for now. Listen to this, learn from it, profit from it. Go tell your friends to join our service, and for God's sake, join the group coaching session, because this stuff I explain in detail so you can look on your own and not always have to wait for a tweet on a private real-time feed alert on what to do. Remember, babysitting is not encouraged in my service, on the Clueless Day Trading Service. Self-responsibility and personal accountability is what it's all about. That's why we live in the U.S. That's why capitalism rules. Thank you.